earn more money but too busy to start a side hustle? Do it the right way and teach your money to make more money for yourself, even when you're asleep. Dale Corpus will show you just how here on the School of Cash Flow. With his entrepreneurial mindset and extensive experience in real estate and finance, Dale will help you become a responsible, strategic, and passionate passive real estate investor. Learn how you can increase your earnings or find more ways to make money, only here on the School of Cash Flow.
Good afternoon and welcome to the School of Cash Flow podcast. I'm the host, Dale Corpus. I've got a great guest on this episode today. His name is Dave Wolcott, and he was introduced to me by my fellow podcaster and GoBundance colleague, Eric Cabral. So Eric, thank you for the introduction. If you happen to be listening, here's a little bit more about my guest today. So Dave Wolcott is the CEO and trusted advisor of Pantheon Investments, focused on helping investors realize their vision through the Pantheon Advantage. Pantheon is a niche private equity firm that invests in tangible real estate assets that provide cash flow, tax efficiency, and diversification from the stock market. Prior to Pantheon, Dave earned his bachelor's degree from George Washington University, served as a captain in the Marine Corps, and is a serial entrepreneur that has built 3 companies over the past 2 decades. He learned about investing in commercial real estate as a passive investor 20 years ago and has experienced several market cycles. Dave is passionate about helping investors build wealth through providing exclusive access and curation of the best opportunities, the best operators, and the best markets. And currently, Pantheon is an equity partner in over 2,500 doors with a combined value of over $450 million. So without further ado, let's begin. Welcome, Dave, to my show. How are you?
Yeah, thanks, Dale. Yeah, great to be here, connect with you and your listeners.
I really appreciate it. So for my audience that doesn't know you, where are you based out of in the world?
So I recently moved. I've been an East Coast guy all my life. Lived just outside of DC for the past kind of 17 years, but have just transitioned down to Sarasota, Florida, to finally get away from the winters up north. And our kids are out of school now, so enjoying Florida and also seeing the growth down here, especially in real estate in the Southeast, is just phenomenal to see it firsthand.
Got it. I mean, the weather's great too. I take it.
It's you can't beat it.
I know part of your bio, you were in the military first, and then you became an entrepreneur. Like, what was that? What was that transition like? I mean, did you started also some businesses? I'm kind of curious to know what kind of businesses that you started.
Yeah, sure. I mean, it was interesting, Dale, right? Going into the military, right? It was a great opportunity to really serve my country. And you learn a lot of things that aren't typically taught in the academic arena, things such as leadership, teamwork, integrity. You test yourself to levels that you have to go just so deep, right? And do that. So I think it really is a great preparation for anyone in anything in life, and what you do. So I had a phenomenal experience there, and then transitioned into the corporate world after that. And it was a difficult transition, right? I mean, you're in your young 20s, you're responsible for millions of dollars of equipment, people's lives. We was in combat situations, and now you're just working for a company, doing a 9-to-5. So it was a difficult transition, and after a few years of it, I really got frustrated that there just wasn't that same sense of mission, that same sense of purpose, that was in the military. So I think this was kind of the beginnings of my entrepreneurial career, where I knew that, I could do things faster, better, cheaper myself. Why am I working with all this bureaucracy and red tape and things? So that was kind of, I think, the beginnings of my entrepreneurial rumblings.
Makes sense. I mean, what was your first corporate? It sounds like so you did a corporate thing for a little bit, and then you became an entrepreneur afterwards. What kind of work were you doing corporate?
Yeah, I was on the sales side of things, working for an international logistics company. So I love to travel, and I really enjoyed, figuring out international supply chain and things like that. Solving problems
Yep.
Was always very interesting to me. Um, so yeah, I did that for 4 or 5 years, and it was really just on the on that sales side. And then I transitioned into tech. This is, right before, like, late 90s. I took that supply chain where, the whole tech market was just on fire. So things like, ERP systems and supply chain, and getting into tech. And really, that was really all about solving problems as well, right? On the consulting side, using technology to solve problems, to be an accelerator.
Yep, that makes sense. Your your first business venture, from there, was it tech related? Was that when you got into real estate? And just tell me more about that.
Yeah, sure. So, look, you know, having that need to really solve problems and that passion to solve problems, I got into the consulting side of things, and it was really technology and business consulting. Was the first company that I started, and we worked with primarily Fortune 500, Fortune 1000, and government type clients, where we would go in and solve a lot of like process and architecture type problems. Right. So the larger an organization is, the bigger the actual complexities that they had after multiple M&As and things. And so we would go in and consult and do that. Now, I wasn't, a key principal and owner of the company, so I wasn't doing the actual consulting, but I was working with the clients to kind of solve the problems. And so I enjoyed that aspect, and that was really good. And around the same time, my wife and I actually had triplets. So, and we had another child as well. So we now had like 4 kids, starting a business. And I just got so tired of meeting with financial planners, just saying that, okay, the market's going to go up, the market's going to go down. You're going to make 7% over the long haul. You're going to pay taxes and fees, and then you're going to build up this, big equity bucket, and then start pulling out 4% a year and hope you don't outlive your money. And I just did not, subscribe to that. I knew there was just a different way of how to build wealth. And I knew the pressure was on me, to be able to provide. How am I going to get 4 kids, through college, retirement, and everything else that we wanted to do in life? So at that point, I also became just absolutely obsessed with, basically passive income theory, right? And understanding the investment thesis to passive income, and starting to look at different asset classes, starting to invest into private equity, different types of real estate assets at the time. And of course, starting a business, right? Because as Robert Kiyosaki taught us, you need to be a business owner and an investor to, take advantage of putting yourself in the best situation.
Yep. That makes sense. And did you start off, in the real estate investing space? Did you start off already doing investing in syndications, or were you doing anything else? I don't know, rent, like a single family home rental first?
Yeah, it's an interesting question, Dale. So again, this is like early 2000s. Right. So syndication wasn't really out.
Yeah. Podcasts weren't even that big back then. It was hard to get information.
Exactly.
Yeah.
So, there was a lot of, research. I tried to look, we were living in Denver at the time, and looked at trying to do single family rentals, but just could not make the numbers work. At the time, really challenging, to find properties like that. So, but fortunately, I connected with someone who was in the private equity space, and I started doing deals really in Dallas. Like, we did retail, I did some office buildings, I did an oil producing well, and invested in a number of things. Actually did some shale plays with raw land as well in Texas. So really got versed in, how private equity deals are structured, right? And how to go after them. And, a lot of them did very well. So I continued to double down on that strategy as I was, building my business simultaneously. And then really as a business owner, I mean, this is a really important lesson that, I think a lot of entrepreneurs, maybe if you're an early entrepreneur, you don't realize this, but having a need for alternative streams of income is just so crucial. Because you might think everything's going great, but it just takes that one quarter, or it takes that one thing that you're blindsided by, legal implication or something, and you can lose everything, right? You could lose your business, your own, a lot of your net worth as well. So trying to have these alternative streams of income, right, and things that are inversely correlated to the markets, you help insulate yourself and then secure your wealth as you move forward.
Mm-hmm. I find it really interesting because of when you started, investing in this. Because I started investing in passive investments much later on. I mean, again, there's much more information available now, but sounds like you did networking yourself. How did you even make that connection to find somebody to introduce you to that private equity space out of curiosity?
Well, yeah, your network is worth everything, right? And luckily, being kind of in a business development type field, I was constantly talking to people, networking about, and I was always talking about investing, right? Mm-hmm. So it was just really through a series of networking, and yeah, started with that.
Yep. And through it all, the fact that you had the triplets and the kid along the way, I don't even know how I wouldn't even know what to do with triplets. Does the military training prepare you to also have triplets?
Yeah, exactly. To be a father. And I love to tell that story because I know there's people with, one or two young kids out there. You have three.
So I have two boys. I have an 11-year-old and a 7-year-old, but obviously they were spaced out, but having three at the same time, I don't know. I don't even know how I would handle that.
Right. It was pretty intense. The Marine Corps was definitely good training.
Yeah.
To be able to, yeah.
Can I also the fact that that where you are a successful real estate investor, were you also looking at other vehicles besides real estate, or was it really just real estate that you were looking at? Mm-hmm.
Yeah, so I actually, as I talked about, I mean, that's a really good point. And I think there's a lot of people in the space that are 100% focused on real estate, which is great. And there's active investing and there's passive investing, right? And as an active investor, that's your business, and that takes a lot of time to do that. But what I became really fascinated with was this whole theory around passive income, theory and investment thesis. So real estate played a part. I think that was one part, in the toolbox that you could use. But there's other things, right? There's other things like infinite banking, leveraging the whole life insurance policies, right? So as I kind of worked and created Pantheon, my vision was really just to help articulate to people, what is this alternative theory that financial planners aren't telling you about, no one's telling you about, right? And it involves a lot of things, not just real estate. Real estate is one great asset, but, let's just talk about tax for a minute. Taxes are your number one biggest expense that you're going to have in your life. So wouldn't it make sense to put together a comprehensive tax strategy to try to mitigate your taxes and try to align yourself to that? Instead of everyone's always chasing, this one's a 12% return, that's a 15% return. What is that? Well, what if you could reduce your taxes by 20% permanently? That's massive, right? So when I put out my book, we actually created what we call is the Pantheon Holistic Wealth Framework. And what we do is really talk about key components and infrastructure to do that kind of holistically. And again, real estate is, I think one vehicle in there with which, for you to invest and supports that, but there's a lot of other components to it.
Just, commenting on what you just said, I mean, a lot of people have financial advisors. A lot of my listeners are in the tech space, and some of them are newer just to the idea of alternative investing and just passive investing and whatnot. Financial advisors don't talk about this stuff. A lot of this education is just not there. And it's just, you almost remind me of like kind of, financial advisor sort of as it relates to the alternative investing space. I mean, why is it that, financial advisors and whatnot that don't talk about this stuff in general, like the stuff that we're talking about right now?
Yeah, well, I think there's a few reasons, Dale, right? It's a great question. So number one is, syndications and these types of investments were typically reserved for the wealthy previously, right? Until the Jobs Act came out and syndications became available to the masses, people didn't even really know this was going on unless you were ultra wealthy. You really didn't realize that. The second part is the financial services industry, right? The multi-trillions that are in that do not want you to think about another strategy. They want you all in on Wall Street. And the products that they sell you are actually, just geared towards Wall Street. They don't have products like this that can support it. So therefore, they're not going to talk about it. They might say, okay, if you want real estate and you want to diversify, here's a REIT. But you know what? That's buying retail. When you invest in the stock market, you're completely buying retail, right? So I think that's another reason, is that they're actually not familiar with it themselves. And we have a number of investors who are financial planners investing in our deals, right? So, that kind of tells you something, right? And we have other financial planners that say they're transitioning out of, Wall Street and trying to get into real estate because they've seen the light. And once you really understand how money works, right, you'll realize how much better this strategy is. And here's a great simple example, Dale, for the listeners, right? So if you took, the average financial planner's advice, and let's say, you saved and saved, until retirement, and you had $4 million at age 65, then they're going to advise you to withdraw a rate of 4%, right? Mm-hmm. So at 4% of 4 million, that's 160,000 a year. And you might have thought, hey, 4 million is not a bad number. I did pretty well. We saved, we got to that. But they're not really talking about the taxes that you're going to have to pay, the fees that have eaten into that all during that time. So, now that 160K is, maybe it's more like 120, that you're living on. You have no deductions or things like that, coming out at that point in your life. So therefore, you're just at 160K. Whereas if I took a portfolio of real estate, either, single family real estate or syndications, right? And let's take the same scenario. You got 4 million at 65. Well, if you're making 8% cash flow, right? Yep. That's actually double. You've actually doubled that. So that's 320K that you're living on. And if you're doing your taxes right, you're not paying any taxes on that. Yep. So you've actually doubled the amount of income that you have. And then the great thing is you're also not killing your golden goose, right? You still have equity value that's probably appreciating 10% a year. And this is how you create legacy wealth. This is how the wealthy are doing it. And they are saying the rich get richer, right? It's because they understand, they've spent time to educate themselves and understand how this works. So when you can really get your head around that different, investment thesis and how that works, it's extremely powerful.
Okay. No, that's excellent. One of the other key terms that you threw out earlier on was the idea of infinite banking. which I have some general knowledge about, but you're the first guest that actually is talked about it. And for those my listeners that are brand new to it, can you kind of just explain what infinite banking, what that is?
Yeah, 100%. So this is such a valuable tool, Dale. Like I actually got, I've had such success with this over probably the past 8 years. So essentially what this is you're leveraging a permanent whole life insurance policy, and you're able to put money into this insurance policy. The money compounds and grows tax-free. Okay. You're able to pass it to your heirs completely tax-free, no probate, nothing. There's inherent asset protection built into it. So if you have any issues with creditors or things like that, this is completely insulated. But one of the coolest things is especially for entrepreneurs, real estate entrepreneurs, business owners, things like that, there's this whole concept where you can actually borrow against the cash value of the policy. So you fund the policy over predefined set amount of time, and then you're able to borrow, up to 80, 90% of the cash value of the policy. So what this does is this actually creates you having your own banking system. So any income that I get, so all of my passive income streams that come in, I dump them into this policy immediately. So it's like my own bank, right? And then when I want to go do something like make an investment in my business, maybe we want to buy a new investment property, I don't need to go to the bank and fill out all of their forms and wait to find out if I'm going to get secured or not, right? I have the complete access to use my funds. And so I can use those funds to do that. And then the way I came into this, which is just very sophisticated. And by the way, this is a cornerstone of what family offices use for building true wealth, right? For the ultra wealthy. And many congressmen and senators are using this, right? So it's about as bulletproof as you get. And it's been around for a long time. It's just a lot of people don't know about it. And part of the reason is also you have to actually structure these things properly. It's very important that you work with the right folks to do that. And I got my license this year so I could actually fulfill this for our clients, because I believe so strongly in, setting it up the right way. But yeah, being able to borrow and access that money is really key. And then that last point that I was going to make that I think is really, really nice is, so let's say you had 100K, you take 100K, you had funded it into the policy in that first year. You now find a syndication that you want to invest in, or it could be a single family property, something like that. I'm going to put 100 into the policy. I then take out 90,000, and I can use the 90,000 to invest in the property or my syndication that's making, a healthy double-digit return. Mm-hmm. And you're creating a spread. So when you take the money out of the policy, it's considered a loan, which is tax-free, but the money is, growing, like, let's say it's 5.5%, 6%. But then you have a loan for 3.5%, right? So you've got a little bit of a spread there where, you're making money on the spread, and you're now able to use the same dollar twice, right? And this is what I love about it, right? And this is what's great about, real estate as well, is, we look at assets that are, multi-dimensional. Right. So instead of just taking a stock it's going to go up or down and you're hoping it's going to go up, right? Real estate has all these inherent, benefits to it that we understand. But the same thing with infinite banking, right? So if you can now accelerate your real estate returns by using this, and then also alternatively, I use all of the cash flow that comes off of the real estate and I dump it right back into the policy. So I have dry powder for the next thing. And there's a guaranteed floor on this, so you can never lose money, right? So this is a great also store of value for that, 6 to 12 months, rainy day money that you want to conserve and, protect your family. It's a great place to store money as well.
No, it sounds a great place to park your money. You're getting yields with your money parked out of there. I'm curious, how liquid is it? Is it easy to get your money out?
So you're right. There's a one-page form. You fill in a couple of lines of information, how much money you want and everything, and it's wired to your account. Usually have funds within 48 hours.
Yeah, it's quick. I know you have the book, your holistic wealth strategy. Tell me more about that. What does it entail? What's it about?
Yeah, absolutely. So, as I was going through this journey, Dale, like I wanted to really, maybe that was kind of the consultant in me, but I was trying to articulate again how you build wealth and everything, right? So we defined this into really 4 simple steps, right? And the first one really starts with you and setting your vision, right? Because if you don't have a vision, if you don't have a target, you're going to miss every time. So it's really important to set your vision and where you want to go, right? That's number one. And then along those lines, it's all about changing your mindset, increasing your financial IQ, your mindset IQ, and also your health IQ, right? Health is such an important aspect, right? I mean, I can tell right away that, you're very conscientious about your health. You probably work out quite a bit though, right? And most folks, business owners, entrepreneurs are very, focused on health, because if you don't have your health, you could have all the wealth in the world, right? But it doesn't mean anything. So it's really critical to actually focus on health, but also, again, this focus on mindset. And a lot of people really talk about mindset, but it's critical, right? Because I see even my daughter's boyfriend, and some other folks, right, that we talk to, they learn different ideas, like some of those ideas from financial planners, things like that. And so they start to get into scarcity mentality, some different assumptions from the Wall Street that frankly just aren't true, right? And limit their results. So you need to be able to expand your mindset, increase your financial IQ, and learn these concepts, because they're really not taught anywhere. And it's very fascinating, Dale, right? We go through life, everyone goes to college, all these academic schools and everything, but all we learn is how to make money, right? We're never taught anywhere how to protect and grow your money. Where is that taught? It's not. Besides a great podcast like this, right? School of Cash Flow, and some other folks. So I think that's really critical. That's number one, right? That's kind of the first phase that you get in place. And then the second step is all about creating an infrastructure, right, to set you up for really building wealth. And when you create an infrastructure, right, we talked about taxes and everything. You have to work with a right tax plan, not someone who just files your taxes, someone who understands the value of doing bonus depreciation, things like that, and how you can use different strategies to receive money, to spend money, things like that, so that you can do that. And of course, Tom Wheelwright is phenomenal at really teaching that, right? But having tax strategy is absolutely key. The infinite banking, like we talked about, is just, again, it should be a cornerstone of what you're doing for protection, for growth. And this is also about control, right? This is also about having a lot of control with your money, your wealth, and being able to do, what you want. So that's really important, in estate planning as well. Then we move into the third phase, which is really asset positioning. So I meet with a lot of investors who say, hey, this is great. I get the concept, makes sense. I want to jump in, but I don't have any cash, I don't have any cash to jump into a deal yet. Well, do you know how many people actually have, equity sitting in their homes right now that is paying a rate of return of 0? Because equity in your primary home, it's trapped equity, right? So how about repositioning that, right? That's one place, and the numbers are staggering of how many people actually have money just tied up in their homes where you could be putting it to work. Another thing is you're able to use like a self-directed IRA account. I'm sure you've talked about this, on your show before, but some people still aren't aware that they can get into alternative assets with self-directed IRA. So that's important as well. And then just looking at trying to, reposition basically your current portfolio, right? And then the last step is really going after achieving massive passive income, right? So it's understanding, deals, getting into some of these deals, real estate syndications, self-storage, direct investments into rentals and real estate rentals, things like that, things that are basically going to increase your passive income while reducing your taxes and then lowering your risk as well.
Yep. I find it really, interesting. I mean, I'm in the Bay Area. I mean, especially since COVID's appreciation in all those homes around the area skyrocketed, and everybody has a ton of lazy equity. And it's kind of interesting, just to hear, your strategy and what you teach and whatnot about the fact that there's a lot of equity trapped in people's homes, or a lot of people are still we're taught just to pay down the principal of the loan down faster versus, I mean, who would have ever thought of, using a cash out refinance to tap into that equity to invest it in higher return, cash flowing investments elsewhere. That in itself, is a strong, is something that could really change people's lives if they just switch the way they think about it. You know what I mean?
Correct.
Yeah. So it's just, it took me a while to understand that as well, being conservative and just knowing what I know and what I was taught, but I'm with you now. So I just think it's really interesting that you just, you teach that. And another thing though, too, it's just, I love how you also talk about how health is a cornerstone of just, of and an important thing that you should have in your life. Yeah, it's right. I mean, I like to work out every day because it energizes me. And as I'm building wealth, I want to be able to live long, to be able to enjoy it with my family. So that's another important thing. I wanted to switch gears a little bit, and I wanted to talk about just asset classes, because it sounds like you're invested in a lot of different types of real estate asset classes. Can I ask you, like, was there any asset classes right now that you favor more, and why? Mm-hmm.
Yeah, so great question. And again, I really kind of come at this, my perspective is that I come at this as a limited partner investor, right? I've been investing for 20 years myself, right? So I've been trying to figure out what is the optimal portfolio to have, right? Where you have downside protection, you have a recession resistant assets, you have cash flowing assets, you have tax efficient assets, and then you have some good potential for upside growth. So that's really kind of our investment thesis, and we're trying to bring those different asset classes to bear for our investors so that they can build diversification. So diversification by different operators, different geographic markets, right? I mean, I can imagine trying to invest in California, right? Very challenging, right? But you look at areas like the Southeast, the Southwest right now that are just on fire. We're looking at areas like that. So multifamily has been our core, a core focus, because I think that is one of the strongest, and it really has an asymmetric return profile. And what I mean by that is something where you have downside protection. So look, we're just coming out of the pandemic right now. And at the end of the day, when the market dropped 35, 40% there in March, people need a place to stay, right? I mean, that's Maslow's hierarchy. So where can you displace people? It's one of the key things that people need in life. So I find it is a very stable asset class. I think that's really key. It provides very steady cash flow. It's a hedge against inflation, right? Because now as we're seeing, huge inflation numbers kind of tick up and everything, we're able to increase rents, right? So by having that, that asset, that's good. And then, of course, if you're doing renovations, doing value add to some of the deals, you have that upside potential, right, to exit typically in about 5 years where you have that. So I think multifamily is very strong, and we've done Class A, Class B, Class C, and again, having a nice mix of those between markets, different operators, and also different business models, right? In some cases, right, we might have a Class A project where we bought it direct from the developer, and the developer just wanted to like lease it up and just get out of there so they could go and do the next property. They're not in the business of operating something. So we can come in and operate really efficiently. We can make money on the deal right out of the gate, based on relationships, finding off-market deals, things like that. So multifamily, number one, I think is a great asset that should be a strong predominance of the portfolio. I also think self-storage is a very recession-resistant asset class. It has some of the same attributes that we talk about, right, and multifamily as well. I think that's really good. And I think there's also further insulation within multifamily and self-storage, right, where if you have, single-family rentals, right, and you have a vacancy, I mean, you don't have any revenue coming in. Right. So I think there's a lot more risk, there associated with that versus when you have a 400 unit property, you can handle some swings and vacancies, changes. So those are some really good asset classes that, we focus on. We're actually also bullish on some other interesting things like, in the crypto world, Bitcoin mining is coming up of late. That's a very interesting asset class that if structured properly, you can actually get similar benefits where you have tax depreciation, you have cash flow. So very similar, right, to real estate attributes that we're talking about.
Yep. You've been an LP, a limited partner investor for quite some time. Because of your experience in that, and some of the listeners here are getting started off in LP investing, I wanted to ask you, have there been any notable investments that went sideways, any horror stories, just, anything that comes to mind?
Yeah, great question. I really have not, luckily I haven't seen anything that's gone sideways or there's been a major issue. We had an office building that didn't, hit pro forma numbers, maybe by half, 50% of the projections on one deal. I had a small multifamily property that it was off kind of projections. But for the most part, I think if you spend the time doing the due diligence, and this is also what we like to do for our investors as well, is, since we have that experience and we can go through all that due diligence before we even present the deal, right, to our investors, so that they can just kind of look at it and say, okay, right, this makes sense. We've already looked at this, but we have a broader team that's looking at it. And it's not just the operator telling you, hey, this is the greatest deal. So fortunately, haven't had anything, really blow up in the past. And I think that is part of, that due diligence. And it's important to note that real estate is a people, industry. It's all about the people, right? So just so you see great numbers on a pro forma or something that comes across your desk and looks like the greatest deal, but it's all about the team. Can that team actually execute? And also, being a business owner and, for so many years, right, I understand how valuable it is to know, can someone actually execute across, what they're promising?
Yep, absolutely. It's like, talk to a lot of folks that are in the space, and it's really you need to bet on the right jockey. the right team that's running the
It's
show and whatnot, like you could pick whatever asset class there is, run with it. But if you're not with the right team, things can go sideways, and it can end up turning into a horror story. Yeah.
yeah.
Um, I want to ask you next, because you made the transition from being a limited partner to having your own syndications and whatnot. How did that happen? Did you know you wanted to do that?
Yeah, so this is actually pretty interesting. I don't know if you're familiar with Strategic Coach,
I'm not.
if
Yeah,
you've
yeah,
heard of that.
yeah.
So it's actually the top entrepreneurial coaching program in the country. It's based out of Canada by Dan Sullivan. I'm in my fourth year of going through Strategic Coach, and it's all about actually helping entrepreneurs create clarity, right? And create clarity by them giving you thinking tools to think about your thinking, to walk through different examples of how to get just different perspective on your business and things. And so through that process, what I really realized was, number one, it's really should be, your business should be a true focus on your unique ability, which is your innate skills, what you do really well, how you provide the most value to people, right? And so for me, I really love creating, meaningful, trusting relationships. I like solving problems for people, and I like helping people, right? So that really made, a lot of sense there. I also wanted to have a bigger impact. Being in the corporate world, and even in my last consulting business, we were working for corporate customers all the time. But this is just so much more rewarding for me, where I can truly impact, someone's, financial future and their families. It's extremely rewarding and has a great impact. So much like you're doing, and educating people and helping other people is great. And, I really want to live an exceptional life. So it's all about seizing, what makes sense for you. And so for me, being able to focus on my unique ability, my strengths, taking this passion that I loved about wealth building business, and then trying to translate that into creating value for investors. That's how I really came up with the model. And I actually came up with this all in my head before I knew people were even doing these different types of components. I said, this is kind of what I want my business to be.
Mm-hmm. Knowing what you know now, if you were to start all over again, because would you start off in a similar way, investing in, be an LP investor, private equity, et cetera, or would you have done it differently?
The only thing I would have done differently is I just wish I had, all of these learnings and this advice that I'm creating right now. Had I learned that when I was actually just coming out of college, I mean, I would have achieved, goals in half the time. And again, this is why I feel so passionate about this topic. And it you can't start too early, right? My kids are in their 20s right now. So, we spend a lot of, we have family mastermind sessions, and anyone we're talking to, we like to talk about these concepts, because really, if you really think about the psychology of investing and wealth, right, it's not really about money. Money is just a medium of exchange, but it's about living the life that you want to live, right? Creating the right mindset, setting your vision for what you want to live. And then, the money is just a vehicle to help you, get there.
Knowing that you're a dad and you've taught you've made your kids financially literate. I mean, what are things, parents should be doing? I have younger kids than yours. I mean, what are things that I maybe should be doing with my kids to, even to talk about similar things?
Well, the really young ages, right? I mean, obviously those little entrepreneurial things, I think everyone sets up a lemonade stand or something with their kids, and that could be their first, trials and tribulations with entrepreneurship. But, definitely once they get into, middle school and, without a doubt, in middle school, it's all about teaching them these concepts. I mean, I would sit with my sons, we'd be at the barber. We'd go to the barber, and then you'd say, how much money do you think this place makes? right? They've got this many chairs, they're open 8 hours a day, and they're charging whatever, $20 a haircut, right? So how, it's like a different way of thinking for people to understand things, or even when you're traveling, to have, talk to your kids about how things are running. What is the industry behind things, right? I mean, I think that's really important, so they understand, that big concept, and then they figure out kind of how money works. And also, the biggest gift you could give the kids is not to give them any of that baggage that we had, right? Which is, oh, I've got to pay off my house, right? Following Susie Orman advice, right? That I need to pay off my house first. I can't have any, credit card debt, or, all of these things, or, things from Wall Street, right? That are just ingrained in people, and then they teach their kids. So that's what happens. But you have an opportunity, to create a different trajectory for your kids.
Yep. Yeah, absolutely. Favorite real estate investing strategy? Is it value add, or do you do something else as a favorite investing strategy?
I would say it's really, syndications.
Yep.
I mean, I would say syndications, and, that spans across, value add. I mean,
Yep.
C class, A class, right? Different things. And the reason being, because again, I mean, I think especially if you're a passive investor, if you love this and you want this to be your business, then by all means, go active. But as a passive investor, someone who has limited time, because you know how to make money, you have a career doing something, and you're doing a great job at that. Okay, that's great. Then take the the extra income that you have, and then invest it into these other assets, right? I mean, because you again, you're going to start to see exponential advancements, right, in your wealth, because they're multi-dimensional assets, right? It's not just looking at the stocks and saying, this one is up 10% a year. You have to factor in these other things.
Yep. Some final questions for you. What are you excited about in your business right now?
Well, super excited for 2022. Just really grateful to have the opportunity to to meet with other folks and help have an impact with them. Grateful for my health, and we are launching our own podcast. Is coming out this month, called Wealth Strategy Secrets of the Ultra Wealthy. So that's something we're really excited about. We have a new opportunity that's coming out that it looks very, very strong. It's one of the best opportunities that I've seen, and actually in the past 20 years. Very exciting to be able to bring that to our investor base. I'm really excited about that. And I'm also relaunching our book this year. So working with a copywriter and trying to put that in place to relaunch the book and be able to reach more folks this year. So we have a lot planned.
Oh, it's amazing. By the way, how can somebody get a copy of your book, The Holistic Wealth Strategy?
So the best way, if you just go to our website, pantheoninvest.com/wealth-strategy. And you could get a free download of the book. We're happy to send it to you. If you want a hard copy, we'll send you a hard copy as well, and happy to share it.
Cool. And so what is, like, you have a great life, just the way, you talk and whatnot. What is real estate invest? Like, how is, like, would you say a lot of it is a tribute to real estate investing? I'm just trying to, I like to ask my folks that are, a lot of them are real estate investors, obviously, like, what has it done for your life?
Well, I mean, kind of like I talked about, Dale, right? It's this overall strategy, right? Because you could be a great real estate investor, but if you don't have the right mindset, right? I mean, how are you leveling up? And kind of, if you really think about this a lot too, this is also really the, trajectory, kind of Maslow's hierarchy, right? Towards a level of self-actualization. Mm-hmm. Right now, there's a lot of talk about this, but we're always talking about leveling up, living a better life, right? What does that really mean, right? So if you can spend more time to be really intentional about the things that you want to do, and focus on this type of trajectory, then, I think you're going to find a lot more meaning in what you're doing, a lot more success, a lot more fulfillment. Because it's not just about, doing one thing, right? I could say that, hey, you're the best real estate investor or entrepreneur that there is, but what if you don't have a great family life? I mean, you want to be a great dad, you want to be a great parent. What if you didn't have that health, right? How much money do you think Steve Jobs would pay to get another 20 years? Could he have gotten another 20 years on his life, right? It would be massive. So I think all these things are really important because, again, kind of when I talked about earlier, money is just a medium of exchange. I think about it as like oxygen. I'm always seeking to grow my wealth so I can have a bigger impact on more people. And then also we're creating, new experiences with our family and in my life that, most people are always saying, no, you can't do that. Right. I mean,
Right.
We all probably know this, right? Most 90% of people are going to say, no, you can't do that. That's too risky. You shouldn't do that. Right. But look, my goal is to live to 116. That's my number. Right. So it's not only longevity, but I want to have vitality. Right. So I'm focusing on these things. Right. So on the weekends, like, I put away my real estate books and I start reading about like, heart health and exercise and different things like from guys like Peter Attia and people that are doing really amazing stuff, to really continue to advance that. So, all in all, I think, living a great life is really, my goal and what it's all about. And that's kind of what we talked about earlier, which is setting your vision from the start. Because if you don't have a great vision for yourself, you're going to just plateau right away.
Yep. Success. What does success mean to you?
Yeah, success really means, to me, it's, how can I serve other people? How can I be absolutely at my best, and operate in a peak performance to really serve others and then to be fulfilled in what I do, right? I'm seeking fulfillment where I can have, great relationships with my work relationships, right? And there's a great way to really think about this as well for listeners to kind of encapsulate this, right? And this is what truly struck me about, Robert Kiyosaki's book in the beginning. To me, it wasn't just about, hey, real estate is a good asset class to go invest in. This is all really about freedom. Okay. And there's 4 components to freedom that, I think are, the measure of success, right? It's having freedom of purpose to do what you want to do, right? It's having freedom of relationship to work with who you want to work with. I mean, I'm so grateful for the partnerships I have with my investors, with my partners. It's just great, right? Also having freedom of time, right? To work, when you want to work and be able to take, different experiences. So having those freedoms, I think, is just super powerful to set you up to, again, living, a life of fulfillment.
No, amazing. Lastly, how can somebody get a hold of you?
Dale, let me just add, one last point to that, right? Which is, how many great podcasts have you listened or TED Talks where someone says, I went through some massive transformational event, whether it was a loss of a loved one, a chronic illness, or something. And then they came back with this huge success story, right? And you think about those things and you're like, wow, that was really powerful and that was really moving. Yep. But for folks out there, now is the time to really create your destiny and your vision. Don't wait till there's some car accident or chronic illness, that you're afflicted with. Create a big vision for yourself and make it happen now, because you're the one who's in charge of your destiny. So make it happen.
Yep. The time is now. Really good point.
Yeah. Yeah. Just to get in touch with me, look, I gave out the link. I'll give it again. It's just pantheoninvest.com/ /wealth-strategy. Get a free copy of our book. We're happy to connect with you there. If you want to connect with me on LinkedIn, happy to connect there, and please, reach out. Happy to help folks any way I can.
Good. Very valuable information. That's a wrap, folks. Thanks, Dave, for joining me on this episode. Definitely love your perspective as it relates to growing your wealth, et cetera. And everything is so valuable. And to my listeners, feel free to reach out to Dave directly if you have any questions for him. And thanks for checking out this episode of the School of Cashflow. Remember to leave me a podcast review on iTunes, as it helps me attract even more great guests just like Dave. So until next time, live a life abundantly.
Thanks for listening to another episode of the School of Cashflow. We hope you enjoyed our deep dive into all the tips and tricks you can use to help you on your passive investing journey. In the meantime, you may visit www.cashflowschoolpodcast.com for more great episodes. Don't forget to subscribe, rate, review, and share. That's all for this episode, folks. See you next time.